please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay. All right, we'll just come back to you in a minute. It's about a 0.4% uptick on both the Sensex and the Nifty, so it's a fairly decent start. Okay, now giving up a little, but still 36 points higher on the Nifty and 135 higher on the Sensex. So a very good start, and the mid-cap index as well up about 0.4. To be fair, we've seen good starts only to sputter by noon or afternoon, but at this point in time, Reliance is heading the list with its expansion under its belt. So that stock up 1.3. ICICI Bank, again, the private banks were sulking over the past 2 days. That's up 1.2. Vedanta, HCL Tech, Vedanta, Hindalco. I mean, the metal story, as Anuj was highlighting along with Manisha, is continuing to keep the flag flying. Among the banks, SBI also up. I forgot Tata Steel among the metal stocks. HCL Tech is doing well. M&M, India Bulls Housing, Tech Mahindra, Sun Pharma, TCS, all of them doing well at this point in time. But Dr. Reddy's is down 3%. So clearly, now the investor worries on that stock are showing up. As well, showing a little bit of trouble, Infosys, it continued to fall. It was not among the winners yesterday either. Aurobindo, GAIL, ONGC are stocks that are losing. BPCL, in spite of the 50-cent fall in crude prices, is not showing much of a relief. HUL, HDFC are among other heavyweights which are mildly in the red, not too much. But clearly markets are continuing to hold at least with a 1/3 of a percentage point gain.
Yes, it's a good opening for the mid-cap index as well, about 0.3% higher. The advanced decline ratio is positive, 1,200 stocks on the advancing side. The pocket that's gaining the most amount of traction this morning is fertilizers. Every fertilizer stock you pick is up about 10 to 15%. Nagarjun Fertilizers, Madras Fertilizers, Mangalore Chemical, FACT, that whole lot is up about 5 to 20% or so, with Nagarjun topping the list. VST Tillers and Tractors, that's also a stock which is doing very well this morning on the back of positive sales growth coming in for the month of December. So 7.5% rally over there. Then you have a couple of these stocks that are in the news. Titan, because of positive commentary that came in from the management, Titan is also holding up in the green, up on 1.5% over there. You have JSW Steel. Goldman Sachs has initiated coverage on JSW Steel with a target price of 315, so 1% higher there. NMDC, which has raised prices by 500 rupees a ton, it was gaining yesterday. It gains further today, up about 0.7%. And some of the gainers from yesterday include Leyland. That stock too, in opening tick, was a bit higher. Ashok Leyland now up almost about 1% or so. So good opening for the market. The Nifty, of course, it is still in that range, but it's getting to closer to that, 10,500 mark.
Yeah, but actually, it's off the highest point of the morning already, right, Sonia? It could be a bit of an interesting day. So, as it happens, on days like this, the first gap up is normally sold into. Then you see if there's second, sort of rally. Because, the evidence of last 2 or 3 days is there with you. So, you don't want to take undue risk. And I think, for me, the space to watch really would be mid-cap, because we opened at about 4:2 in advanced decline. I don't think we can sustain there, considering the kind of moves that we have had over the last couple of days. Just a couple of interesting stocks which, I just looked at. One is Hexaware. That's been one of the strong IT stocks. That's breaking out. And the other is Jet Airways, where again, lower crude prices. Normally, that's the most sensitive one to crude prices. So that also is an interesting stock right now, opening in green tick. But Ashwini, your thoughts on market opening? No trade zone for now?
No, we've bought this gap up, and I believe today the market will show follow through, and you could have short covering on the upside, particularly on the bank Nifty. We are back to almost the intraday highs. So chances are that today the market could actually get back above 10,500 on the Nifty, and maybe closer to 550, 600, because we've tried for a couple of days to break down. But I think today the market probably has re-entered that same range again. So you should have upside today on the market.
Okay, and any interesting stock, Ashwini?
See, ICICI Bank is leading Bank Nifty upside. So the banks which are hammering down the Bank Nifty, State Bank, ICICI Bank, they could lead the Bank Nifty higher today.
But it was the mid-caps that saw some seminal falls over the last 2 days. Is there, today they may be having a relief rally if what you say pans out, Ashwini, that the gap up, if bought, could lead to a trending higher day. So is there any mid-cap that you would bet on?
See, the same usual suspects like Reliance, Naval, JP Associates, etc., because people who went short there now would need to cover their positions, and it will become an avalanche. The moment market momentum turns, all of those guys start running again.
Okay, Sudarshan, your thoughts both on the index and more importantly, any stock that is now beckoning?
Well, on the index, I have no views, which means really that stay away. And intraday trades on the long side are possible. Intraday trades are also possible on stocks. I explained about, you asked Reliance, Jubilant Foods, as also Petronet LNG. It is quite likely that today could be an intraday long opportunity. That's possible. And that's how we should be positioned.
Okay, Mitesh, what about you? A lot of these fertilizer names, tractor companies are all moving up. Anything in that space or anything at all?
Yeah, I think I do like the fertilizer names. I think, both Chambal and RCF, I think, are looking good to me. Chambal would be a buy with a stop at 154, target of 175. In fact, we had a buy day before yesterday there. RCF, I think once it starts getting past levels of around 98.5, I think, you should see some traction, and 105 could be the next target. That about, I think Dish TV is something which interests me a lot, and Hexaware, I think, is just breaking above this 345 zone. Would be an interesting trade on the long side as well.
Okay, by the way, just keep an eye on Graphite India. That's a big move, on huge volumes on that stock. Just pull out the chart of that stock. Graphite India up about 6%. Okay, before we thank our experts, Ashwini, any big call for the day?
I think banks is the big call, particularly ICICI Bank, almost 2% higher now. So if you stay with financials, I think by the end of the day, you will be able to do fairly well.
Okay, fair point, gentlemen. Thanks a lot for taking us through market opening. We'll talk to you at around 10 a.m. Market master for the day, Pramod Gubbi from Ambit, is with us now. Pramod, good morning. First of all, Happy New Year to you. I think we're talking for the first time in 2018. So, do you think this year could be different? We had a really bumper year last year, both in terms of index and in terms of mid-cap stocks.
Yes, Happy New Year to you too. Yes, I mean, I don't think this year will be able to match last year's sort of returns, and also the nature of the movement will also be slightly different. Remember, the last year was yet another year where we had stock prices doing well, multiples expanding without underlying earnings expanding or any sort of meaningful recovery in the economy. Now, this year that situation could reverse. I guess it's about time earnings growth picks up in terms of contributing to stock price returns over the multiple expansion. In fact, you could see some sort of compression in multiples, or at best stability in multiples. So it's about time the recovery in the economy that we're seeing now also trickles down into corporate profitability improving. And finally, we see some sort of a double-digit or even a 15% sort of earnings growth to the index level.
Or the next year, for FY19, you mean?
That's right, for FY19.
Okay. Well, morning, Pramod, and of course, a Happy New Year from me as well. But, look, over the last 48 hours, we've got some fairly decent macro data, the core sector numbers, the PMI numbers, and of course, the commercial vehicle numbers. For all the three companies, it showed a quantum leap over the kind of average sales and output that they have been showing over the last 2 years. Is that making you want to look at even the current quarter and the next quarter differently in terms of earnings?
Yeah, I think there'll be two forces at play here. So one is, of course, the base effect. We saw the base we are looking at is the December 2016 quarter, which we all know wasn't particularly the greatest. So you will see some really large numbers.
If I may interrupt, Pramod.
We'll also see perhaps the...
if I may interrupt, this is even without the base effect. If you looked at the monthly numbers of the three commercial vehicle makers, Tata Motors, Ashok Leyland, we have taken an average of the last 24 months, and the December performance is a good 20 to 25% higher. This is even without base a very good number. So should we look at it differently?
Yeah, actually, exactly. So that's what I was coming to in terms of the second force that is at play is perhaps the earliest signs of the recovery in the underlying economy, particularly in areas like cyclicals, industrials, manufacturing. We've been talking about the sort of, in some ways, a quasi-fiscal stimulus that the government has provided through both tax rate cuts and sort of easing in terms of the taxation element itself. And from our discussions with people on the ground, you clearly see, that's already at play. What we thought would start from Q4, we've already seen that happening through perhaps late November and December as well. So the second piece is the more interesting one, and that's where we get more confidence that the economy is clearly on the mend, and we should see better numbers at the aggregate level, as well as at the company fundamental level as we progress through 2018 calendar year.
Okay. Well, just want to point out that Dr. Reddy's is falling further. It's now a 3.5% cut that Dr. Reddy's is seeing. Volumes are also picking up. In any case, I mean, it's been a stock that has been on the downside for very, very long. And now more pressures coming through as employee problems crop up in the establishment inspection report that you just heard about a while back from Ekta. We'll cover that stock in greater detail in a bit. Pramod, the budget is the next big event that everyone's watching, right? And this is the first post-GST budget. This is the current government's last full budget, so all eyes are going to be on it. What's your expectation?
I think it's unsurprising that the government will go for some sort of a stimulus package in the budget, given the state of the economy, as well as the need to create jobs, particularly ahead of an election year. And I think you will see several initiatives within that. And in some ways, we've already seen the government acknowledging the fact that we will slip on the fiscal this year. That should also give them some room for the next year as well, because otherwise the 3% target would have been too steep, given the need for a stimulus package. So we do expect quite a few fronts on which the government will help or give a helping hand to the economy, particularly with a focus on job creation. I guess the rural sector will also get some sort of benefit through revenue expenditure. And finally, the tax stimulus that I just talked about should see continuation in the final 18 budget as well.
Okay.
By the way, just want to point out, some of the cement stocks are doing well. Sagar Cement is up about 9% right now, and the other one is Ramco Cement. That's also trying to break out. So that stock is up about 1.5%.
There's a triad of data which I'm not able to, which I'm not able to overlook. It's just exciting me. That cement number in the core sector is not just a base effect. 17.3% higher, even without the base effect, was a good number. And we got the government's fiscal deficit numbers. There was a huge expansion in government expenditure. And now you have trucks. So all three seems to be indicating that government spend on construction or whatever, some activity has increased, and that ties in with the growth in cement. So I'm not surprised that these stocks are reacting positively.
Exactly. So
you may go on to say that this is the growth that the market is all the while been reflecting, but somehow all three are coming good.
Oh yes, and some of these stocks have done well. So economy-facing stocks, Pramod, which ones would you want to buy right now? Cement has had a volatile run, mostly good, of course. We have CV makers which have started to do well now. Construction, pure economy-facing stocks. Which one would you bet on right now?
I think autos would definitely be up there. Generally, consumer discretionary should do well in instances of a tax stimulus. So within that, autos, along with retail, apparel, jewelry, and all, become natural candidates. We'd also look at the cyclical names, particularly construction, particularly in road building, where the government has had significant success in terms of implementing the programs. And potentially, as we progress through 2018, even buildings, construction companies focused on buildings could also get interesting. And also some of the domestic cyclicals, be it metals, not so much oil and gas given where crude is heading. Maybe the E&P guys may not be so much the OMC guys. So I would totally agree. Domestic cyclicals and domestic focus, consumer discretionary plays should be the focus for 2018.
Okay, but Pramod, what about the flip side of this, government infrastructure and rural focus, the fiscal deficit? If you look at some numbers, it appears that it might even be 3.7% or somewhere between 3.5 and 3.7% for the current year. To avoid that, they could actually put a brake on expenditure. On the other hand, next year also, instead of getting to 3, they may probably come to 3.2. Normally, foreign investors take a negative view of macros, though, of course, for the last 2 days, we have seen them buyers. Your, interpretation of what would you expect from the fisc and how the, investors might react?
I think it's also sort of a considered global phenomenon, right? So we've seen the sort of tax stimulus being approved in the US as well. So to that extent, the net effect, which could get reflected in the form of bond yields and exchange rate, could get somewhat sort of offset, which is what we've seen in terms of the movement with the dollar and the rupee. So I wouldn't read too much into it just as yet, maybe 2018, but sooner or later, I guess, those concerns will emerge and will start showing up in the flow numbers as well. But for now, other than the fact that bond yields will continue to rise up and, at best, banks' treasury returns will get reversed. And perhaps some lenders who rely largely on the bond market or the wholesale market for their liabilities could get impacted quite significantly. So to that extent, we are already seeing some investors booking profits in those names, particularly housing finance companies, which have been most exposed in terms of an asset liability mismatch there. Not a problem for 2018.
Okay, well, you have a great year ahead, Pramod. Thanks so much for joining us as always, and we hope to speak to you soon once again. That's the word on the market, but let's talk about some stocks now. CNBC TV18's news break is confirmed. NMDC has taken a steep increase in prices of fines and lumps, taking prices to nearly a 3-year high. Let's find out why, though. TRK Rao, the Director Commercial at NMDC, joins us now. Mr. Rao, good morning. Can you start by telling us what was the reason for this price increase?
Good morning, ma'am. If you see the domestic steel industry, the domestic steel industry has been doing very well this year. There has been a 16% growth in the domestic steel production as well as consumption. Then there are prices of all our end-use products. The steel, sponge iron, HR coil, billet have all substantially gone up in the domestic industry. And in the global industry also, there has been an upsurge in HR coil prices, there has been an upsurge in billet prices, and India is also exporting for the first time. Apart from all this, there has been an increase in prices in Orissa and Karnataka also, which has resulted in a good market buoyancy, and in order to address the market, we had to correct the prices.
Okay. Mr. Rao, good morning. So after this price hike, and since this is a steep price hike, are now prices at level with global prices, or are global prices still at a premium?
No, global prices are not at a premium. In fact, if you see our on landed basis, our prices are still competitive. We are at a discount at East Coast and West Coast, and also on the landlocked plants like Jindal. We are at a discount which ranges from 5% to 35%.
Okay.
They are not at a premium.
Okay. You're not at a premium. Good morning, Mr. Rao. If you are able to push through these prices, it clearly indicates that there is demand. So should we also see better volumes from you in the second half of FY18? Okay, if you can give us a number on it.
Absolutely. In fact, we had our volume growth has been quite very good till October this year. But for a major accident on the railway line, it affected evacuation. But we had a very good market. Even now we have very good market, and we hope to have a good market in the coming quarter also. This quarter we did 8.3 million tons.
which was less compared to the last quarter. But in the Q4, we would like to see around 11 million tons is the minimum what we can achieve in the terms of sales. The overall year will end with 36 million tons, which will be far higher than the last year.
Okay, I'm asking you also because the Supreme Court has raised the cap on mineable capacity in, I mean, in Karnataka. That should make a seminal difference to you. How much does the potential increase for you in Karnataka?
Karnataka, we are hoping that there would be an additional increase by about 2 million tons.
Okay.
Year on year.
2 million tons, right. I just want to come back to that point you were making earlier about how your prices are still at a discount compared to global prices to the tune of at least 5 to 35%. Does that mean that we could perhaps see some more price increases in the future? And if yes, what could the quantum be?
No, not we. Actually, we factor in a lot of market parameters. We just don't see. We only catch the international iron ore price trends. We also see the domestic market and then price accordingly. It's not a one-to-one direct translation of, international prices being reflecting in the domestic market. Our market dynamics are completely different from cluster to cluster.
Okay. I just have another question. We'll come back to pricing as well. Our colleague Anshu broke the news that the divestment of your steel plant is on hold now. Could you confirm that, and do you have any thoughts on that?
No, our primary focus is on commissioning the Nagarnar steel plant. Basically, all our works are going at full swing, and that's a separate process which the intermediary group that is determining it. So, but basically, we want that the plant should be commissioned in first half of September 2018.
Okay, but would you simultaneously pursue a strategy to divest it?
No, there are a lot of other issues in that strategy. In fact, we have slowed down because a lot of other legal issues are there. There is a lot of process involved in that. That is nothing to do with our commissioning of the plant.
No, I agree with you. I agree with you.
That is the focus.
I agree with you that your priority is commissioning. So should we say divestment is on the back burner in that case?
No, you may have any...
No, I'm asking you. I have no view.
Our focus is already on that. No, because there are a lot of processes which have to be completed. The processes are on. There's nothing called complete stoppage, or there's nothing called complete going forward on this.
Okay. Can you tell us what the outlook is as far as margins are concerned? With this price increase that you've taken, will it flow through to your margins immediately? And are we looking at better margins than the almost 50% level that you've recently clocked in?
Yeah. Yes. Last year, yes, we had around 50% margins. And this year, the prices and the market has been quite good. And we also anticipate a very good market in the Q4. So, keeping all this, I think there should be 3 to 4 percentage points increase in our margins.
Okay. Well, let me come to this divestment for one last time, Mr. Rao. Can you give us some timeline?
No, timeline cannot be given, because a lot of other variables. Sorry, it will be very difficult to give any timeline for these kind of divestments.
Okay. Well, you are a veteran watcher of the metal space. What is the sense you are getting of both global and domestic metal prices? Do you think this good run can continue? No signs of peaking off anytime soon?
Yeah, the year 2017 has been really very good. And 2018 also, the Europe and OECD, they seem to be growing very well. There is a huge demand in the MENA region also. I think the outlook seems to be quite bright and positive.
Okay, all the best. Thank you for joining us and speaking to us about that. So not only is demand looking good, prices have gone up, and that will have a direct flow through into their margins as well.